Let's go since 9:30 New York Open. Let's skinny this down a little bit. Let's go through the process of why the dual trend filters work really good with V bottoms, V tops, and also determining when the liquidity grabs are coming in, when they are looking for stop hunts, all these algorithms. These algorithms are leaving their footprint for us. We're in a big long right now. We're in a V bottom. We're in a sweet spot V bottom. That's the best V bottom we can get. If you're using the strategy, the liquidity grab strategy we have, either LG1 or LG2, you have two strategies, you members. This is the best V bottom you're going to have. If it's a sweet spot V bottom, it's called a sweet spot. It's above my structure dots. If it's above my structure dots, we talked about this morning, it drove the market one for 10 S&P points. Another move was 15 S&P points after news. For potential of a nice push after news this morning, it's just done it again. That's a sweet spot V bottom. Price is driving hard right now. Why? Because sweet spot V bottoms hold my structure dots. We created our own Renko bar type to show a structure in the market. We got our outer zones. It's been tested for the last 30 years to be the top zones according to our algorithm. That should reverse price and keep us on the right side of the market. We got our inner Renko dots that tell us where market structure is. So on retracements, it lets us know if we get a V bottom on a retracement and it doesn't get below our structure dots and then it closes up, there's a V bottom. That's called a sweet spot V bottom. It should drive price. So manual entry right there would be a fill of 59.18 a quarter on the S&P, plus or minus a few ticks depending on slippage. It drove as high as 29, over 10 S&P points on the sweet spot trade, and it happened in less than 2 minutes because of the sweet spot trade. Let's take a look at the rhythm after 9:30. It's the same rhythm every single day. So the great thing about our dual trend filter, we have our outer edge trade, our outer edge zones that keeps us on the right side. They're green. Our inner dots are our structure dots. So if our inner dots are green and our zone is green, we're only looking to buy bias. Buys only, dual trend filters up. It gave us our first V bottom, manual entry there. And if you wanted to use turn on the liquidity grab trader to let it enter, put your stop in and your targets, there would be the first one. Then it had another normal V bottom because it closed below my structure dots by more than 2 candles. It did not close below my line in the sand, the outer edge of my zone, so it's still a buy-side bias, still green. Your manual entry would be around 12 plus or minus a few ticks. Your liquidity grab entry would be the close of this liquidity grab on the strategy that you guys have, you members have. Should be, fill should be around 59 and 14, 59, 14 3/4 plus or minus a few ticks with slippage. And it drove as high as 31. It went up 15 S&P points on that last liquidity grab trade. Then the market went into chop. My dual trend filter went green-red. We know that's a chop market. You want to stand aside. You do not want to use a strategy that we have. We do not want to use a liquidity grab strategy in a chop market. Stand aside. You want to either wait for a V bottom, V top to form, and then you want to turn it on these smaller Renko sizes that we use in the room. Normal V top comes in, it turns red, shorts only, trend filters down. There's your V top, manual entry would have been 17 a quarter, plus or minus a few ticks depending on slippage. The first liquidity grab, if you turn it on for liquidity grab trader to exit enter the trade, 14 3/4 short, plus or minus a few ticks. Got as low as 98, fell another 15 S&P points. Another sweet spot V-top came in because below structure dots when it happened. The reversal. Manual trade, 04.5 plus or minus a few ticks. Got down to 98, over 6 S&P points. LG comes in. Then we come in with green-red. If green-red, the trend filter does not agree, that's chop market. You can stand aside. There is a trade called the failure trade. That's for more advanced for traders that know the system very well. If you want to just stick on the side of the trend, just go with the trend filter. Don't make this difficult. Let the algorithm do the work. This algorithm is showing the footprint of all the algorithms in the market. All these algorithms in the market, these are electronically traded markets. It's leaving their footprint. My algorithm picks it up. It picks up the trend. Right now, chop market stand aside, meaning it was green red. Right here started turning green red. They're against each other. Outer zone and our proprietary Renko bar type, the market structure dots were opposite. So you wait. Then it turned green right here at 9:53 and 54 seconds. You look for the first V bottom with trend. We're green. There's your first V bottom. Look for the first liquidity grab buy. Manual trade started at 13.5, drove all the way up to 29, over 15, 16 S&P points to the upside. Comes again, another V bottom. There's your manual entry on a V bottom. 16, 59.16 entry, plus or minus a few ticks depending on slippage. If you missed that, you can take the liquidity grab 2 trade, liquidity grab 2, the second one right here, which would actually be liquidity grab 1. Let me put that 1. That's the first liquidity grab after a trend change, after a V bottom. Dries price. Then we get a sweet spot. This is the best trade you can get in the room on a market structure, and it comes with LG1. That entry was 18.25, got as high as 29, drove price almost 10 S&P points. Our liquidity grab trader, if you used it, fired you in on this first LG1. LG1 fired here at that level. And now you can see the rhythm is now back to a chop market. I'll show you in a second. Our algo just picked up a chop market, indication of a chop market again. Stand aside. Here's LG1. All right, so we turned red right here. So it went to chop again, right? Went to chop here. It turned green red. It went to chop. Stand aside. And then it turned red. So what do we do? We're looking for a V. We're looking for what? A V top. Do we get a V top? No. It's a no trade zone. No trades in there happen at all. So this is no trades. It turned red, looking for a V top. Never got it. No trade zone. Now we're back to green. What do we look for? We're looking for a V bottom. As price is ticking on the S&P, I'm looking for a V bottom. We're green. Green. I need a retracement here. Ideally, you want to stay above my structure dot. Structure is now 28. I want to stay above structure on the retracement. Get a V bottom. Look for the first liquidity grab buy. So you can see that's been the rhythm here this morning. Beautiful. Chop zone kept you out. Chop zone kept you out. Trend down. Trend up. Trend up. No trade zone. Now trend is up. Now we're looking for a V bottom. Currently, traders are looking for a V bottom in the room. And traders is using these algorithm out of the room in all these markets. That's how you want to do it. Stick on the side of the tone. We do not try to outguess the market. We're not smarter than the market. We let the market leave its footprint. Once it leaves its footprint of what all these algorithms are doing, we're just riding the coattails of the professional traders. If they want to bring the market up, these professional algorithms, the smart money, if they want to bring it up, we're going to go up with them. If they want to bring it down, we'll go down with them. If they want to chop this market, we'll stand aside, wait till they want to drive the market to the upside or downside. Remember, there's only 4 phases in the market. There's only 2 things the market can do, first of all. It can either go vertical or it can go sideways. Vertical is this when we're trending up, red, green, red, green, red, right? Or it can go sideways, which is chop. If it's chop, our dual trend filter is opposite green, red, stand aside, wait for it to go green again. It went red here, looking for a V top. Did not give us one, so no trade. Now we're looking for what? We're looking for a buy retracement. I want to see the market start showing red candles or red Renkos. You want to stay above. If it really wants to drive price, you want to stay above the structure dots right there. give me a V bottom, drive price higher. Then the market will give a nice liquidity grab. They'll pull back, try to grab liquidity, take out the counter trend traders as they always do. Counters are always wrong in the market, and they'll drive price with liquidity grab trader to the upside. So that's a rhythm of the market on a daily basis. You just got to stick on the side of what the market's telling you. These are electronically traded markets. They will indicate what the market is doing if you follow the trend. The biggest upgrade to our software we had is this dual trend filter. It will keep us on the right side of the market. If it's trending higher or if it's going sideways and chop, it will let us know. It's a leading indicator, not lagging. This is what's helping a lot of traders that are members inside and outside the room on all these different markets. If it's trending up, we're going with it. If it's trending down, we're going with it also. We want to buy high, sell higher, short low, buy lower with order flow. We don't want to look to buy low, sell high. That's for novice traders of trying to catch the falling knife, or they're trying to jump in front of a runaway train. So traders are trying to short these pivot levels, these Fibonacci levels, and they just keep getting run through by these algorithms because that's how they take order flow in. Okay, so that is the rhythm this morning since 9:30. Trend up, chop, stand aside, trend down, nice trades. Chop, stand aside, trend up, nice trades. Waiting our trade set up right now as we speak.